Here's an example of accrued expenses. Before we get into the example, I want to just talk a little bit about accrued expenses. What is it? So, an accrued expense is when an expense is recognized when it has incurred. In other words, when it has happened. So, for example, um, those of you that actually work a job, when you work, you are normally working for, 2 weeks, let's just say, before you get paid. All right, so those 2 weeks that um, that you've worked, the company has to actually report the expense in their books for those 2 weeks that you worked. So when they do that, that's them accruing an expense in their books, even though cash has not been spent or paid out yet to the workers. So they have to accrue the expense when it has happened. So if you work those 2 weeks, they are accruing the expense or reporting the expense in their books for those 2 weeks. So that's what accrued expense means. So here's an example here that I have on the screen. All right, so total weekly salaries expense for all employees. Oh, I spelled employees wrong. I knew that was going to happen. I am not going to move on until that's corrected. Okay, so total weekly salaries expense for all employees is $25,000. $25,000 is paid at the end of each work week, which is at the end of the day on Friday. All right, so hey, that's pretty good. August 31st falls on a Tuesday. So next payday is on September 30th, which falls on a Friday. So number one, we got to record the accrual. Another typo here. I'll just go ahead and fix that live. Record the accrual for salaries expense as of August 31st. And then number two, record the payment that's made on September 3rd to cover the accrued salaries expense. So the first thing we need to do is kind of just lay out a calendar here for the week, Monday through Friday. So that way we understand what dates are associated with what day. So over here, I'm going to just, let's see, I may just do it here. I'm going to put on here Monday, Tuesday, Wednesday, Thursday, and Friday. Okay, so I'm just concerned about the dates. Okay, so we have to, number one, record the accrual for salaries expense as of August 31st. We see here that they say that August 31st falls on a Tuesday. Okay, so if we put that here on Tuesday, August 31st, that means that Monday is August 30th, which also means that Wednesday is September 1st, Thursday is September 2nd, and then Friday is September 3rd. So that's good that we know what dates are associated to what days and vice versa. Okay. So record the accrual for salaries expense as of August 31st. So I'm going to go ahead and set up this beautiful journal here with the date, general journal or account. I use account sometimes. Then we have debit and credit. So the date here that we're going to use is going to be August 31st. Okay, because it says that we got to record the accrual for salaries expense as of August 31st. So, first thing we need to do is go back up here and we're going to grab this $25,000 because that's the amount of the salaries that are paid to employees. Okay, so we're going to grab this 25,000. Okay, and we're only going to accrue 2 out of the 5. Oh, there we go. Out of the 5 days. Okay, into the company's books as of August 31st. So this should come out to be $10,000. There we go. Okay, and this $10,000 is reflecting the August 30th on Monday and then August 31st on Tuesday. So the company has to accrue in their books the expense for those 2 days for August 31st. Okay, even though the cash has not been paid out yet, but for August, at the end of the August, they have to accrue the expense in their books. So to record the accrual in their books, they're going to debit salaries expense for $10,000. Okay, this amount right here. All right, and then the credit is going to go to salaries payable for $10,000. Okay, and salaries payable is a liability account. The company is liable to make that payment to the workers. So this is transaction one, or number one, from up here. Okay. Now the second thing we need to do is record the payment that's made on September 3rd to cover the accrued salaries expense. So the payment is made on this date. Okay, payment made on this date. Okay, so the payment is going to be for Monday, August 30th, Tuesday, August 31st, and Wednesday through Friday, September 1st through the 3rd. That's what the payment's going to be for. So it's going to be for $25,000 because that's paid at the end of each work week. So that's the cash payment. So for the second transaction here, the date that we're going to use is going to be September 3rd. And that's because where we at, the cash payment was made on this date. Okay, that's what it tells us right here. So the cash payment that was made is $25,000. That's cash that went out of the company's bank account. So cash is going to be credited for $25,000. Okay, and this is for August 30th to September 3rd, indicated right here. All right. So this cash payment of $25,000 is going to eliminate this liability here, salaries payable. So it's going to eliminate this balance here of $10,000 by simply debiting this account for $10,000. This is going to eliminate that balance in the salaries payable account. Okay, that's what it's supposed to do. All right, I'll go ahead and erase this X out so there's no one's confused by it. And so the difference of $25,000 and $10,000 is going to be debited to salaries expense. Okay, because pretty much still have to record the expense, okay, that occurred from 9/1 through 9/3. Okay, and that's the 25,000 multiplied by the 3 days there. Okay, and that's going to give us $15,000. Okay, and that's indicated right here for these 3 days. All right, so this is an example, or was an example, of accrued expenses.